Energy shock meets rate shock. Oil is climbing on fresh geopolitical risk, and bonds are selling off. That 1-2 punch set the tone today. Stocks struggled. The Dow finished at 46,558, sitting just above its 200-day but below its 50-day trend. The S&P 500 closed at 6,632 and the Nasdaq at 22,105, while volatility stayed elevated with the VIX near 26. Here's what moved markets. The Middle East conflict kept targeting export infrastructure, lifting crude prices and the energy risk premium. Treasury yields jumped, pushing U.S. mortgage rates to a 7-month high as markets repriced oil-driven inflation risk. And the IEA signaled emergency oil stock releases to cushion Iran-related supply shocks, aiming to stabilize a tightening market. The reaction was straightforward. Oil up, yields up, and the curve bear steepened. Rate cut hopes were pushed further out. That pressured equities and tightened financial conditions with housing and credit. Feeling the pinch from higher borrowing costs. What it means: investors are reassessing the inflation path. Higher energy feeds into expectations and undermines confidence in near-term easing. Policy backstops, like potential IEA releases and EU energy measures, may cap extremes, but they don't erase the risk premium now embedded in commodities and rates. Cross-asset signals echo the stress. Gold hovered near 499.95 as an inflation and safety hedge. The yen weakened to around 159.3 per dollar as U.S. yields climbed. The VIX near 26 underlines the risk-off tone. Looking to the next session, watch headlines around Middle East supply, any detail on IEA releases, and the tone in treasuries. If crude stays bid and yields keep grinding higher, equity risk appetite likely remains fragile. A pullback in oil or clearer policy support could take some pressure off.